All right, here we are again. How are you doing, Scott? What's keeping you busy these days?
I'm doing well, Roel. Thanks so much. And boy, a lot of things keeping us busy. We got a lot of deals that we're looking at, a lot of projects that we're syndicating and raising capital for right now, and in the process of hiring somebody on that side of the business. And we're getting ready to actually do our first live mastermind since COVID, if you will. So putting the finishing touches on that, which is a select group. We're going to go meet and conduct a mastermind. So looking forward to that. I think everybody is. So a little sense of normalcy, and hopefully the other shoe won't drop and we won't go backwards again. But that's what we got going on around here.
Okay, great. You mentioned that you're doing some syndications. That's actually
hmm
something I wanted to touch upon a little bit. Take
hmm
maybe, if we could take maybe one or two steps back to make sure that everybody who's watching the video is on the same page, because we use a lot of jargon sometimes.
hmm
Could you could you kind of explain in plain terms as much as possible what is a syndication and who are the roles, the people, and what are the
hmm
different roles involved in a syndication?
Sure. So syndication is, boy, that's a long topic and very intricate. But essentially, to break it down in its simplest terms, it is a partnership of folks that go into a project where some are bringing money, but they're not actively investing in a project. And so the SEC, the Securities and Exchange Commission, says that you have a security and you've created a syndication or a syndicate if you have one or more people in the partnership or in the project in which only one person is active and another person is passive. So in other words, if I join into a partnership with someone and I'm the one who's doing all the running around, doing all of the work, due diligence and operations, and somebody is coming into that partnership and they're bringing money to the deal, but they're not participating in any of the management or operations, they're just in a passive role, then I have created a syndicate that is a syndication governed by the SEC. And so we have to go through the process of registering and having the SEC attorneys draft a private placement, all the documentation, and then it's governed by the SEC, who also states who I can invest with and who I can't in terms of my relationship with them and whether they are a sophisticated or accredited investor or not. So without getting too deep into it, that's in simplest terms, you have a syndication versus just a partnership, which most people are familiar with. If some person or people are coming into a project and they're investing passively just with money, but not participating in any of the decisions being made for the project.
Hmm. So we will kind of get into some of those details a little bit, but I
Mhm.
want to kind of take baby steps from the person who is the lead person. What do you call that?
So typically, we set up an LLC, and in the operating agreement of the LLC, I am the general partner. So I could be also termed as, or that person is typically called the syndicator or the promoter in many cases, but the legal term is the general partner. And then other folks that are coming into the project and just bringing their money, they are limited partners, which means that they are
Mm.
passive. So they're limited in their role in this, and that is just bringing them the money, but they don't have voting rights, and then they don't really have the ability to direct the investment in terms of the marketing of a self-storage facility per se, or who to hire, and the direction of what we're doing with rents and prices and things of that nature. They are truly in a passive role, and the only thing they're supplying, unless stated otherwise in the operating agreement, but the only thing they're supplying is just their money.
Hmm. So from that perspective, from the general partner or promoter's point of view, uh, why would they want to do this rather than just doing it on their own?
hmm So in many cases, well, they simply can't for a number of reasons. For our projects, we typically set a minimum. Some of our projects have a minimum investment of 25,000. Some have a minimum of 50,000, and these projects that we're taking on are anywhere from a million on upwards of $8, 9, $10 million. And so, if you were to go out and do this on your own, aside from doing all the work it takes to, find a project, especially a development project, and get that up and running and across the finish line, it would take typically 25% down payment to get a loan on a project of that nature. So even on $1 million project, that's 200,000 or 250,000. Well, if you don't have that amount, but you have 25 or 50, it allows you to get into the business, get into a project You still get equity ownership in it, which means that you get a K1 at the end of the year and you have equity in it. So you participate in the cash flow, the percentage of the cash flow commensurate to how much money you put in. You also get the depreciation at the end of the year for tax purposes. And then you also have, based on your percentage, the profits from the sale on that project as well. So you're a fractional owner, you are a small owner in that project, but it allows people to put their money into play and get those types of returns. Our internal rates of return are, without again getting into a lot of details on the numbers, but anywhere from a 2x to 2.5 times their return, or spaced over time, somewhere in the 15 to 20% internal rate of return on their money invested in something passively. And so that is not as much as what the promoters make on our side, but darn close to it. And those returns far outpace anything they can do by just putting their money in a bank account at 0.0% interest, or a CD, or even in the stock market. The returns that we are offering and projected on our projects far outpace the S&P 500. So that's why folks see the benefit of getting into it, because they get higher returns and they get the depreciation and they can share in the upside.
Mm-hmm. So you brought up a good point there. I want to point out, I've had some people comment to me. So you mean to say that in order to invest in something like the size of a self-storage facility, you don't necessarily need to have 250,000 liquid sitting in your checking account. Right?
Yep. So that's exactly what we're looking at right here. And here's the thing, Roel, and we've had this conversation with, we have folks that come to us because they know that they can invest passively, but many of the folks that are coming to learn the business, sometimes, at some point they realize in order to get the size of facility that they want, they're going to have to save their money, or they're going to have to partner with folks in order to do so, to be on the general partner side, or to be able to get a deal, up and running or across the finish line. But if they take part in one of our projects, they become an owner. And so what that does is that then opens them up to more lenders. When it comes time for them to do their own project, they can show the lenders that I am an owner in self-storage. I have that experience. Many times people invest with us passively because the banks turn them down for lack of experience. So not only do they not have 250,000, but the bank said no because they don't have experience. Well, by investing passively with us, they get that experience because they become owners. And so the next time they go into the bank talking about their own project, they can say, I am an owner, and hold their head up high saying, I'm a partner in this project over here. And having gone through the syndication process and meeting the other folks that are in our community and in that deal, they can create their own syndicate and bring along partners, or if they've amassed more cash at this point, now they can put themselves in a better position to go out and do their own project. They have more cash or access to more through other folks. They have experience from a lender standpoint. So this is their first entree into self-storage investing without doing their own, but still becoming an owner. Does that make sense?
Yeah, it really kind of brings to mind the idea of, let's say somebody gets an inheritance or a big lump sum of money somehow, or they win the lottery and they got $500,000 and they say, I'm going to invest in self-storage, not knowing what the heck they're doing, not having any experience around them. It brings to mind the idea, the thought of, just because you can doesn't mean you should.
Correct.
And so what are some of the, now you've been leaning towards, in terms of talking about people investing passively, what legal considerations should somebody off the street, or somebody who's maybe in their 50s and they're looking to invest in passively in a self-storage through a syndication, as you mentioned, what should they consider? Are there stuff that they need to prepare? They need to file? Do they need to, or can they just hand you a check and say, go invest it for me?
Well, we don't accept those checks, first of all, if they were to say that. But to your point, they should look to, first of all, to work with somebody who is syndicating, rather than just giving someone a check, as you mentioned. And we say that jokingly because that doesn't normally happen, but there are folks that actually do that, where they're working with somebody that they know, a friend of the family or some type of business associate, and they have not created a private placement. In other words, it is not a true syndication. That is where the documents, the operating agreements, and the entire private placement has been drafted by by a SEC attorney and filed with the SEC. So if they give them 50,000 or give them 500,000 to invest passively, it's really against the law. That is not a proper syndication. So I get that's the first thing, but then also it's the main thing, Roel, and that is if anybody is looking to invest passively, it starts with the promoter. Who is the person or the group, the individuals, the organization that is putting this investment forward? What is their track record? What is their history, their experience? Have you vetted them well? Have they done successful projects? And when I mean successful, it's one thing to raise capital and buy a deal. Have they raised capital, purchased or developed a facility or any type of property? Have they got it up to cash flowing and stabilized and then sold and then given those returns back to their investors at the same rate or the projections that they told them on the front end or come close to it? There's a whole lot of folks out there that call themselves syndicators that have very little experience in going through the entire life cycle of finding a deal, raising capital, buying it, communicating on a regular basis with their investors, letting them know that when they've hit their milestones in terms of occupancy and creating that value. And then if they say it's a 3-year syndication and then we sell and distribute profits, did they sell in 3 years? And did they sell for the amount that they projected or more? And did they give their investors back their return in terms of an equity multiple and the internal rate of return that they discussed 3 years prior when they put together their prospectus and their offering memorandum? So that's, I know that's a lot, but those are the things that that somebody needs to look into and look for when investing with a syndicator or a promoter, is that they're actually creating a syndicate and then they've actually gone through and done what they've said that they're going to do, and they've made money for their other investors. Outside of that, it is speculation, and there's a risk if that company, that individual, doesn't have a reputation and experience behind them.
Yeah, because it sounds sexy to be able to say, oh yeah, I'm going to invest in this thing and it's self-storage and there's no tenants, toilets, or trash, and and I put my money there and I get the internal rate of return of this amount. But there's a whole lot of even due diligence on the investor side, the silent investor side, before they stroke a check or they transfer any money. Right. So
yeah, there is. And again, to your point, somebody doesn't come off the street and give us 500,000, but we've been in the business for a number of years, and we've been educating people, we've been investing. And so when we do a capital raise or when we hold a webinar, there are many folks that they don't have intimate knowledge of everything that we've done, and they have been introduced to us just recently and learned what we do and how we go about doing it. And then they invest with us, and many times I wish they would do a little bit more due diligence. Those are the type of folks that we want to work with. But to that point, or to your point, Roel, there's a lot of folks that will. They'll just they may have met us or heard about us and about our project, and they'll write a check and or wire funds into and get involved in one of our projects very early on.
And a good point you mentioned too. You wouldn't just necessarily accept somebody's money just off the street if you also didn't know them.
Correct. That is correct.
Right. So
and there are certain rules and laws regarding that, and the type of offering that we put out. We are governed by the SEC and Regulation D, which governs all these private equity placements. And so there's some certain rules that are involved, and there's different types of funds that we can create. So for instance, a Regulation D 506B means that we can't openly solicit or advertise that we have a project by putting out ads on Facebook and inviting people to a webinar, or anybody off the street, or dropping flyers around at the country clubs. That's a no-no. If we have a 506B, we can only work with accredited investors and those that we have a previous relationship with, and we can't advertise for, to just anybody, the masses. And we can also take up to 35 unaccredited or unsophisticated investors. And that is defined by the SEC. By having $1 million net worth minus your personal residence, or making $250,000 a year as an individual, or $300,000 as a couple. And now they're also, as I say this, and as this is coming out, they're changing some of those regulations as to defining what an accredited investor is. But for now, and for purposes of this conversation, that's who we can invest with. There's also a Regulation D 506C, which allows us, through the Jobs Act recently, allows us to solicit openly, to put Facebook ads out and invite people to a webinar without a previous relationship. And that it was the Jobs Act that then created websites and companies like Realty Mogul, CrowdStreet, Fundrise, the folks out there where you can invest smaller amounts, but in different projects, multiple projects, without doing it on your own, and to do it without having a relationship with that person. It's just a business and it's just a website. But all those folks have to be accredited, and in order to invest with you, you cannot take unaccredited investors. So those are the two ways and the groups of folks that you can solicit and advertise or work with when you're putting together your projects.
Mm-hmm. So what it kind of seems like, I'm trying to put myself in the shoes of somebody watching the video.
Mm-hmm.
There's almost like there's two different paths. Would you suggest that somebody what would you suggest if someone wants to get up to speed to being an accredited investor, or being able to jump in as a passive investor in some way, shape, or form? Or is there kind of like a baby steps path?
Yeah.
Could you speak to either or both?
Sure, and I've seen people, they don't. There's not one way versus another, or even the majority of people go in one way versus another. When I got started in the business, myself and I partnered on a project. We didn't raise private equity. We each had our own money available that we put into it. There was also a seller who was willing to finance a portion of it, and then a bank loan on top of that. So we didn't have to come to the table with a whole lot of money in order to get into that project. The next project was the seller financed some, and then my third project was one where I did have to raise equity because I didn't have $250,000 to $1 million sitting in the bank. And so at some point, as an active investor, you're going to have to go out and partner with folks, or create put together a private placement and syndicate funds to take down a larger deal. Could you do smaller deals where the down payment is only $25,000 or $50,000? You could. It's a little more challenging to do in real estate, commercial real estate, and with self-storage. It's going to be a smaller project in which you're going to be tasked with managing it. And I don't know about you, Roel, but I'm not in the business of managing and sitting behind a counter and we oversee our property managers and our property management companies, but at some point you'd have to be in the day-to-day. And so to get any kind of scale in this business, you're going to be taking down larger projects, which means that you are going to be bringing on private capital at some point. Some folks, again, another way to answer your question is just that they don't have that experience with in self-storage, so they don't have the experience that they can state to a lender or to a private equity partner unless they're in the business. And so the only way to do that is to buy a small one, or to invest passively in a project like ours, where they are a minority partner and they come into the project. They are an owner. They don't make decisions, but they are aware of the decisions by way of our meetings, our webinars, and the information that we put out. So they know what's going on with the project. They understand what it takes to own, operate, make decisions, and run these, even if they aren't the ones making them. They're just coming alongside of us. So again, from that standpoint, then they build up that experience. They can go to the lenders as well as private equity partners once they have their own project and say, I have this experience, I am an owner, and I'm familiar with this process. And then they can go do it on their own. So a couple different paths. I feel that leverage is always a better way to catapult your business, and leveraging by being a passive investor first and then going out and doing your own project certainly gives you a leg up. And you get to see what somebody else is doing without making the mistakes on your own if you're to do a smaller project without any help or without any partners.
Mm-hmm. Now, in terms of on like the baby step side, like let's say somebody has watched a few of these videos and they're like kind of been familiar and said, yeah, I like Scott. Coach Roel has these conversations with Scott. I've taken in a couple of these videos. Kind of forewarning, I'm going to set you up to plug the other side of the business, which is the education side.
Sure.
What would be like from beginning to end? I don't know if you can do it in a couple of minutes, but what would be kind of like the life cycle or entry point for someone brand spanking new? They got a bit of money in retirement funds, and they say, you know what, I still want to learn about facilities before I jump in and put my retirement funds to work.
Yeah. Well, I will. I'll plug our education course or getting educated somewhere somehow, whether it's you have a consultant that comes alongside of you or assists you, or bringing in a partner with experience. Once again, doing it on your own, certainly you can. But we have seen so many folks make so many mistakes because they were unwilling to get educated or unwilling to bring in somebody with experience to help them. And so sometimes they lose not only the battle, but they lose the war because the property they bought they didn't do their due diligence, and they overpaid for it. And a couple of what should have been, foreseen issues came up that were unforeseen because of their lack of experience. And so getting that education and true, I'm well, Coach Roel, I don't have to tell you that I'm a big fan of coaching and mentoring. There's a lot of content out there, and we even put out a lot of content. This is part of that content and blog posts and articles, and you can download great content, but there's no substitute for intentional mentoring and getting questions answered and having somebody walk alongside. And again, this maybe is a different conversation when I'm talking with you, Roel, but for the folks out there, having somebody like a Coach Roel or a coach or mentor, somebody to help you and come alongside of you to answer your questions and speak into your specific situation, and look at the resources that you have, and a project that you're working on, a deal that you found, what are the missing pieces in that, to get that deal across the finish line. And you can't pull down information free on YouTube or, anywhere else on the internet, or get it on Facebook or any of the other forums out there on real estate specific to your situation and your deal. Or by the time you tried to piece all that together, you would lose it. It would fall out of contract, or you never had a chance to do it to begin with. So, getting information, learning about what it takes to get into the business. And then when you're serious about it, making sure that you have somebody, a coach, a mentor, a partner that has experience in self-storage to come alongside of you, so that A, when a deal comes along, you can get it across the finish line, or B, that you don't make a mistake that you can't unwind and come back from. And it happens to be the one mistake or the one deal with so many mistakes that it takes you down, it takes you out, and your credit is shot, and you lose money, and you lick your wounds, and it'll be several years before you get back into the business again.
Awesome. Well, I just noticed the time. We're actually quite a bit over. Do we have any sort of events coming up that people can participate in to get started?
We do.
Wink, wink, nudge, nudge.
Yeah, head over to selfstorageinvesting.com and click on our events tab. And we do have our virtual self-storage academy coming up where we do talk about this. And so, we don't promote, this is for the betterment of folks to go out and do the business. But when you get into larger projects, when we're talking about syndication and partnering, absolutely you need to know your stuff. And so we touch on that at the academy, and definitely give you the resources, the tools, and the beginning steps and the foundation as to how to go about doing this. And so, depending upon when you're watching this, we have a regularly scheduled rhythm of virtual academies. And when we go live again, I'm looking forward to that as well. And we'll be doing live events in different parts of the country as well. But for now, same content, same session, same speakers, all the information is in there. We're just doing it virtually right now. It's a live event, but virtual on Zoom. So, click on one of those courses. We have our virtual academy, and we also have our private money academy as well, where we really dig into and spend 2 days talking about just about the syndication side as well. So head on over if you want to learn more about that, and sign up for one of our classes. And we'd love to see you over there as well.
Excellent. Well, once again, thanks very much for your time, Scott. I know you're super busy, and we'll catch you next time when I can try to bend your ear on another aspect of self-storage investing.
All right. Fantastic, Roel. Thanks so much. Looking forward to seeing you again soon. Take care.
All right. Stay safe.
You too. Bye now.
Hey, thanks again for joining us here at Self-Storage Investing. We really, really appreciate it. For more great content like this, make sure to click the subscribe button below this video. And be sure to follow us on Facebook, Instagram, Twitter, LinkedIn, and Bigger Pockets. You can also visit us at our main website at selfstorageinvesting.com, where you'll find even more free content, our ebook, and registration to our free webinars and education courses, and much, much more. Once again, for more great content like this, please click the subscribe button below. Thank you.